Guys, haven't been in the real estate game for about 15 years now. I've been through some city and state-wide recessions and booms, as well as the 2008 crash. Those were some very tough times with some very valuable lessons learned. Using history as our guide, we know that market cycles are inevitable. We know that before they happen, meaning once every 10 years. And it's important that as a real estate investor to prepare as best we can to protect our portfolio against these severe losses. Smart investors understand that economic crashes are not only healthy, they also present a window of opportunity. Ask anyone that went in heavy at the height of the last crash and how they maximized their returns. To take advantage, however, it requires you to prepare for the crash. So here are some tips to prepare for the next market cycle. Okay, number one, know your market and your rent rates. This is something that you should know as a matter of course, but it becomes even more important as we roll into the next economic slowdown. Aside from being in tune with valuations in your market, you should be working closely with your management company that is knowledgeable about the market rent and the area. During a correction or a crash, other landlords may drop their rent to maintain a higher occupancy. And tracking these changes becomes even more important from a competitive standpoint. Number two, cash flow is king. If your property cash flows, meaning it brings in more income than expenses and the mortgage, of course, then it doesn't matter to the value. If the value of the property drops during a crash, it won't impact you unless you go to sell. But in many markets, experienced investors, they buy properties that produce income and they consider appreciation as icing on the cake. But it all depends on your strategy and your market, okay? Number three, buy C-class or better. Real estate investors evaluate neighborhoods like grades in school. You have your D-class properties, which is typically a high crime or high vacancy rate. Your B-class properties, they typically have your upper middle class people. And your A-class properties are typically newer or high-end new developments, with the best locations in the city. A good C-class area is where you're going to find your average neighborhood with plenty of renters. When you invest in C-class or better neighborhoods and economically diverse markets, you avoid the worst of the negative factors when the market turns, and then you can ride out the storm from there. Number four, build a war chest. When the market turns, you want to have a nice, healthy, liquid cash reserve, because when that crash hits, there will be many that didn't prepare. So when there's plenty of short sales and foreclosures, you can get really good deals out there. If you have cash in the bank and you're ready to deploy it, a crash is really the perfect opportunity for you to expand your portfolio quickly. And number five, invest in diversified economies. Don't invest in markets where there's a single industry in the city and they depend on them for their livelihood. A diverse labor force is absolutely vital. Detroit is a very good example. When the automotive industry failed, all the home values plummeted and people just left Michigan and they went to where the jobs went. So many rentals are still in the city and the suburbs went vacant, as did office and commercial space. To this very day, many places still haven't recovered. Instead, look at cities centered around hospitals or healthcare, education, distribution centers, and factories. The market is going to crash again. Technically, history tells us we're already overdue based on the 10-year cycle. We don't know when it's going to crash, but it'll happen, in the next 24 months or so. That's what the experts are saying. But if you follow these points, you'll be able to expand your portfolio. Don't wait to buy real estate though. You buy real estate and you wait. Anyway, if you like the content, check out our podcast on iTunes and Stitcher and subscribe to a new YouTube channel as well. We're working on getting new content out all the time, and it helps build your success, and that's what we're looking to do. And of course, subscribing always helps the channel. Thanks so much for watching, and I'll see you in the next video. Be great, guys. Talk to you soon.